Well, good afternoon, everybody. I hope you can all hear me. If not, then please do let me know and I'll turn the speed up or put the microphone on. We're here this afternoon to talk about making tax digital for income tax. Now, I see that when the original blurb for this session was put out on our website, it hadn't been delayed, but obviously since then, a couple of months ago, making tax digital for income tax has been delayed. It's been put back by at least one more year, which gives us a little bit more time to prepare for all this. So I'll move swiftly on to my next slide, hopefully. That's it. What I'm going to cover is the basic what, where, when, why, who, and how. I will cover all these points in a bit more detail. So we'll start off with who will be affected. Right, who will be affected? It will affect all businesses within the charge to income tax, including sole traders, some partnerships, I'll come back to partnerships in a bit, and landlords where their annual turnover exceeds £10,000. Now I'm talking about turnover here, not profit. So this will bring into its scope most businesses and indeed an awful lot of landlords who obviously hadn't even been aware before that this was a thing they needed to worry about. I think of all the things that might change before this comes into force, I think that turnover limit might be the one to be raised. It is very, very low indeed. Apparently, there are some 3.5 million sole traders in the UK, all of whom, or virtually all of whom, will have to be involved with this. A lot of businesses will already be aware of the requirement for making tax digital for VAT and will be using their facility to do the quarterly VAT return. So that this won't be a complete surprise to everybody, but it might come as a big surprise to somebody. We're certainly deal with a lot of landlords who will be affected and, as I said, have no idea that this is going to come up for them. Partnerships, as I said, will be affected from April 2025 at the earliest. That will be general partnerships. And LLPs will be brought into making tax digital from a later date, which we don't know what it's going to be yet. I don't really know why LLPs have been singled out for this special treatment, but it comes as a relief, I'm sure. In all my examples and everything I'm saying, I'm treating the 31st of March and the 5th of April as the same date effectively. They are not the same date, obviously, and there are some differences for corporation tax purposes, for example, but for this purpose, I won't say 31st of March or 5th of April every time because it just gets too confusing, but just treat the two dates as being the same and being the same as the end of the tax year. So what are we talking about? What will be required? Well, businesses that are within the scope, as we've already seen, will be required to make returns of their income and expenditure in a specified format digitally to HMRC. This is not a tax return, although some of the concepts and the descriptions in the returns will be the same as are in the tax return, but there will still be a tax return which will be required after the end of the tax year, as we do now. Some cases it will be replaced by an end of period statement, an EOPS, which will replace the business part of the tax return. I'm sorry, this is very confusing. It's confusing for us who are trying to work out what on earth is going to be required, and it's going to be very confusing for everybody else. So we'll just work on one thing at a time. The first thing to think is from April 2024, businesses and landlords who are affected by this will be required to make quarterly returns digitally to HMRC. The quarterly returns will be required up to 1 month after the end of the tax month. So that will be on the 5th of August for the first return, but it will cover the first quarter to the end of July, end of June, sorry. So this is a calendar quarters, and unlike VAT, I know a lot of businesses do not have a calendar quarter set up for their VAT returns. These are all prescribed as being for the calendar quarters. That's another complication that you can probably live without if you're already doing VAT returns every quarter. The return will become from digital records, so the mandate will be that everybody affected keeps digital records using some sort of software. There was talk about the revenue providing free software, but they're not going to do that. I don't know if they're going to back down on that and provide some sort of free software, but at the moment, there's no free software from HMRC. But, and this is a big but, there is no requirement for the records that you're working from to be made contemporaneously. So it will be possible for you to keep records, manual records, if that's what you do at the moment, to carry on keeping your manual records. And then before you make the quarterly return, transfer them all across to the software that you will need to use to submit the figures to HMRC. So, and also if you want to, and if your accountant is able to do that, you can ask your accountant to do that for you, do the transfer from manual records to digital records. As well as there being no change to the tax return requirement after the end of the year, there is no change to the dates of payment of tax at the moment. This is most definitely, the message from the revenue is it's most definitely not a tax raising initiative, although as we will see, it is going to raise more tax, but that's slightly different. It's not the main purpose. So when is this going to start? Well, the first inkling that we had that this was going to come in was back in 2015, which is now what, 6-7 years ago, and it will be sort of 8 years ago before we actually start doing this. So it's been put back a number of times. At one point we thought it had just been kicked into the long grass completely and wasn't going to come back, but the revenue is saying that the digital returns for VAT have been very successful. Again, I'll come back to that. So now they really got the bit between their teeth. They want to crack on and go ahead with the digital returns for income tax. The digital returns will also eventually be imported for corporation tax, but we're not talking about that today. So we're now due to start from April 2024. So the first digital return that will be required will cover the quarter to the end of June 2024, and you'll have to submit that during July or right at the beginning of August 2024, which sounds like a long time to wait. But it's really not that far away now. It's only just over 2 years. And as we will see in a minute, the transitional year is even closer, and you need to start thinking about that quite soon. The transitional year is the year before, and that's to do with the aligning of the income tax periods for accounts. So as I've already said, the first quarterly report will cover the period to 30th of June or 5th of July 2024, and the deadline for submitting that will be 5th of August. The revenue have got the powers. Of course, they've got the powers to charge penalties for people that don't make these returns or make the returns late. But they have promised, as they usually do, that there will be a soft landing, and they won't be hopefully be charging penalties right from the beginning. But make no mistake, there will be penalties for not joining in this new scheme. Why are they doing this? Well, sometimes it just feels like somebody at the revenues end has got a bee in their bonnet about this and is determined to push it through whatever the rights and wrongs. I couldn't possibly comment. But one argument they've made is that historically businesses, especially smaller businesses, I'm afraid to say, have been underreporting their income or over-reporting their expenses. I'm not sure that that's necessarily the case, because although they say that the digital returns for VAT have been very successful, in actual fact, the money they're bringing in through the VAT returns is actually less than they thought it was going to be. It's less than predicted to be. They say that because the reporting will be more timely, so you'll be doing it at the time, it will be more accurate. But what we have often thought is, well, perhaps if people are keeping their records at the time, then they will remember more expenses and things that they otherwise would have just forgotten. The other thing is that because post-COVID, we now use such a lot less cash than we ever did before, there is much less scope to miss out on sales. And I think that would be the case whether they were using the digital reporting or not, because if the money's going into your bank account, it's considerably harder to hide than a bunch of cash. And very few traders, in my experience these days, now deal with cash very much at all. So that argument, I think, has a few holes in it, frankly, and I'm not sure if it has much water. But the other argument is that we're now in the 21st century. People are doing things digitally, which we never, 10 years, 15 years ago, we never thought we'd be doing all this stuff online that we are now. And therefore, they need to bring themselves up to date and make sure that people are doing this reporting. Why it has to be quarterly, I don't know. They just think it'll be better if it's done more timely. So as I said, it's not explicitly a tax raising measure, but due to the changes to the way that profits are going to be assessed, they have factored into their budget a significant increase in the income tax take, £1.7 billion, in fact, over the next few years. And that is mainly in their book due to the acceleration of the taxation of profits. I should have said at the beginning that if you want to ask any questions, please do, and we'll try and get them sorted out at the end, I think, rather than just do them as we go along, if that's all right. But if you want to do something, you can apparently do a chat or something like that. The transitional year. This is where life gets slightly more tricky, because as part of this business of making quarterly tax reports, the Revenue said they want to make life easier for everybody, and they have said that what they want is for everybody's tax year end to be coterminous with the 31st of March, 5th of April. So there will be an annual tax return or an end of period statement, which will still be required, as well as the quarterly reports. And these will be required for each business and for the rentals. So you could end up making 4 quarterly reports for your business, plus 4 quarterly reports for rental income, plus your annual return, which will include both of those as well. Now, the Revenue say that they want to remedy their perceived complexity around basis periods. I don't think it's all that complex, but then I suppose I've been doing it for quite some time. There is some complications when businesses start and finish, but once you've got the basic concept around your head, I don't think it's that tricky. But what they're saying is from April 2024, the tax liability will be based on the accounts for the year to 5th of April, 31st of March. So there's no requirement to change your accounting date. So, and the examples that I'm going to use in a minute do use an accounting date of 30th of September, just for argument, just for examples. But there's no requirement to actually change your accounting date. This will lead to quite a lot of extra complexity that we don't have at the moment, as I'll demonstrate with my examples. As I've said, 2023-24 transitional year. So that starts April 2023, which is now 18 months away. And also, as I said before, this will apply to all businesses within the charge to income tax, including LLPs. So as I said before, LLPs will not have to do the quarterly reporting yet. We don't know when they're going to have to start doing it, but they will have to change their to the current year basis for taxing of profits. So looking at this table, when will the dates for the reports be? So just working back as we are now at the moment, in this example, I'm using 30th September, which is quite a common year end. Farmers would tend to use that sort of date because it's after harvest and makes life easier to account for the annual profit. So say your accounts year ends on 30th of September 2022. That will form your base of your tax for the 2023 tax year. And you'll make your ordinary tax return as you have been doing for the last 20 odd years by the 31st of January 2024. Your period to year to 30th September 2023 plus the period to 31st of March 2024 less your overlap relief will form the basis of your assessment for 2023-24. So the following year, you've got 18 months of profits reduced by your overlap relief. And that tax return will be due on 31st of January 2025. I'll come back to overlap relief in a minute. At the same time, so we're looking at the report on 31st of January 2024. From August 2024, there will be the quarterly reports as well. And 31st of January 2025, which is after you've started making your quarterly reports, will be the date when you have to do your ordinary tax return for 2023-24. And as I said, the year to 31st of March 2025 will form the basis for 2024-25. That's pretty straightforward. I think that's pretty easy to follow. And there will still be an annual tax return or end of period statement, 31st of January 2026. Overlap relief, as I've mentioned before, for those people who've been in business since 1997, well, this is 25 years ago now, we established overlap relief based on their profits back in 1997. For newer businesses, overlap relief was established when the business started. It was, for those newer businesses, it was the measure of profits that were taxed twice in the first 2 or 3 years of the business. For those older businesses, the more than 25 years old businesses or partners, that overlap relief was basically a made-up figure. It was made in relation to the accounts for 1996 and 1997, but it didn't have much true logic attached to it, whereas under self-assessment, profits are taxed once and once only, although they might be taxed twice at the beginning, they get relief at the end. So overlap relief is a deduction which was established either in 97 or when the business was started. So as I go back over the basis periods for this transitional year, 23-24, it will be the year to 30th September 2023, normal, no problem, no difficulty there. That's the same as you've been doing all this long time. And that'll cover the accounts to 30th September 2023, plus the period to 31st of March 24, an extra 6 months, less your overlap relief. Now, the overlap relief was established when the business started or in 1997. It is not indexed, it doesn't get increased for inflation or anything else. So in many, many cases, that overlap relief will be quite a small figure, or indeed none, because a lot of businesses don't even make profits in their first years. So it's likely that the profits assessable for 2023-24 will be considerably higher than would normally be the case, because you've got an extra 6 months worth of profits, and your overlap relief is quite possibly quite a small figure. So what the government has said is that these transitional profits, that's what they're going to call this extra 6 months, less overlap relief, the transitional profits are treated as a sort of a separate slab of income for that year. They're still going to be taxable or subject to income tax, but they're going to be a separate slice of income. And they will be ignored for things like farmers averaging and other allowances and income sensitive deductions. So if your income is over 100,000, you start to lose the personal allowance. Apparently, I have no idea how this is going to work yet. Those transitional profits will not be taken into account for those calculations, and will be ignored for farmers averaging. And the tax on these transitional profits can, if you wish, you don't have to do this, can be spread over 5 years. So you'll pay tax on 20% of these transitional profits every year for the following 5 years. The difficulty here is that if you haven't changed your accounting date and you're still using a 30th of September year end, and there's no requirement for you to change your accounting date, then those profits for that 6 month period will be taken from your account to 30th September 2024. And as we've already seen, that tax return for that year will be due by 31st of January 2025. Now, there's not a lot of time between September and January, as we know only too well when we're trying to do tax returns. The months run away with you like there's no tomorrow. And it'll be a scramble. And in many cases, you'll have to estimate those profits for that second 12 months period, because you just won't have them in time to do the tax return. The revenue realises this and accepts this and say that you'll be able to go back and amend the figures. Again, this is such a simplification, having to go back and change figures, which we used to do back in the years before self-assessment. And that was one thing that we were so pleased to see the back of when we moved into self-assessment. But it looks like we're going back again to where we were then. And the basis period for, again, this is an illustration, the basis period for 24-25 will be the year to 31st of March 2025, which will be 6 months profits out of 2 sets of accounts if you've still kept a 30th September year end. So the 6 months out of September 24 plus 6 months out of September 25 accounts. And again, the tax return will be due by 31st of January 2026, doesn't give you many months to get the accounts done and get all the figures done. So it's quite likely that if your accounts aren't that straightforward, there will be a constant going back and amending the previous year when the accounts are done, and with the resulting fact that you may have underpaid tax or overpaid tax each year, and it's going to be adjustments. It's going to be, I'm going to say it's going to be quite complicated, but of course HMRC tells us it's a simplification. So obviously I am wrong. As I've said, the transitional relief for those excess profits in that second part of the 23-24 tax year will be spread over 5 years equally. So each amount will be taxed equally over 5 years. But if the business ceases during that 5-year period, all the profits that haven't yet been assessed will come back into charge. If overlap relief, or in this transitional period, if that overlap relief creates a loss, and in some people, I suppose it may be that the first year produced very big profits for whatever reason they haven't been replicated since. If that creates a loss, you will be able to carry back that loss over 3 years rather than 1 year only. Ah, right, okay, that was my last slide. Oh, they've gone. So if anybody's got anything they wanted to ask, please do. If you don't feel that you can ask any questions now, then please contact me later. You can get hold of me via our website. And yeah, I'll stop sharing the screen now. I think the message is the revenue has said this is a simplification, which I don't think it is. They've said it's going to be easy, which I don't think it is. I think it is the way forward. I think making people do their accounts regularly and make quarterly returns will in time become second nature. We'd already do it for VAT, and although it's had a bumpy start, I think it's mostly bedded in quite happily now. But I think for in the short term, in those first few years, there will be a difficult transition, and after a couple of years, like we've got with self-assessment, after a few years you'll just forget that it was ever any different, frankly, and I think it will be an improvement in the long run. The difficulty, I think, is going to be for people who for whatever reason find it difficult to change their year end. As I've said already, farmers prefer to have a year end which is later in the year after harvest, which makes a great deal of sense. And there might be other businesses that are seasonal businesses that have a different year end, a December year end, especially if you're part of an international group of businesses who automatically have a 31st December year end. That will be quite difficult because you've got such short time deadlines between the 31st of December and the tax return on the 31st of January. The other question I'm often asked is whether we think it'll be delayed again. I don't think so. I think it was put back because of coronavirus, and that's fair enough. But it has been delayed so often already that I think it would make life embarrassing, at the very least, for the Inland Revenue if it was delayed again. My one thing that I think might change is I think the £10,000 threshold for people having to be involved in quarterly reporting is way too low. That is my opinion. And I think that could very well be increased. It doesn't make any sense to me to make somebody who's got a couple of rental properties, or indeed even one rental property, because rents can easily be more than £10,000 with virtually no expenses, to make them do quarterly reports seems to me to be a complete waste of everybody's time, frankly, but that's just my personal opinion. I see that I've just about run over time. I was told it was 20 minutes. Question, best guess on when corporation tax will be making tax digital? I don't know is the answer to that. It was supposed to be at the same time as income tax, but for some reason it's been put back and put back and put back. And I would have thought that it would be easier to make corporation tax, or companies do quarterly returns rather than individuals, because companies by and large already have some sort of accounting function, and unless they're actually dormant, they already have to do certain returns and the rest of it. And it would make more sense to me, at the very least, to make companies join first. But we don't know when it's going to be. There's no dates at the moment. Have we got any more questions? I'm not quite sure. Is there anybody who would like some more information to go back over the the transitional year, or is that quite clear? It's difficult when you can't talk to me to see whether you're still here or whether you've all packed up and gone home. As I've said, if you've got any questions, then do ask me. Yeah, email me afterwards. You'll have our email addresses. And I think that's basically me finished in that case. I've run over by 5 minutes, but Neil Fordham is still here. Thank you very much, Neil. Thanks for letting me know that. At least I'm not talking to myself. Okay, right. I've covered what I was going to say, and I was expecting there might be some more questions, but there aren't any at the moment. I'll hang on for a couple of minutes, but if you want to leave now, there's nothing more that I've got to say. So very interesting, many thanks. Good, thank you. I'm pleased to hear it. It's a shame that it's been put back because we were expecting to see this coming in very soon, but now of course it's been put back by a year, so it all seems that much more remote. But there will be some serious implications for the bringing forward of profits, and it's going to be, for some businesses, it's going to be quite a nasty cash flow issue. So it is something you need to think about in advance. Will you run another webinar closer to the time? I'm sure we will be doing more webinars. It won't be me doing it, but there will be more webinars, especially as we might have more detail of exactly how the returns are going to be submitted. I mean, I'm assuming in my computer ignorance that it would simply be a case of putting together some sort of report, and your software supplier will provide you with the linking software so that you can just press a button and it will go across. The revenue is not going to look at these figures. They're not going to do anything with these figures. They're just receiving them because they think that's a good idea, which is another reason why it's a bit weird that we have to do this. Any more questions? No? As I've said, I think that it's going to be quite a big change for everybody, and 2024 seems like a long way away. I should be retired by then, but 2024 seems like a long way away, and all of a sudden it will be on us and we'll have forgotten all about what we should have done. Please do keep an eye out. Yes, we will provide more and more information as we get it. I think we all thought that quarterly returns for VAT would be a real problem, but they haven't been so far. But then there's going to bigger businesses, with the turnover threshold for VAT registration, bigger businesses are registered for VAT and tend to have better accounting functions. My worry is for landlords who will be drawn in unless they increase the threshold, and that's going to be very difficult indeed for quite a few people. There is, I should have said before, there is of course there is an exception for those who are digitally excluded, and again we don't have any details of who those will be, but the revenue tends to be quite happy about people saying, I don't have a signal where I am, or whatever it might be. I don't do the internet. We have quite a few clients who don't do internet, so they should be able to plead their case for the revenue, or we can do it on their behalf and make sure they don't have to do these quarterly reports where it's just not possible for them to do it. Right, I think that really is everything I've got to say. If there's no more questions, then I think that is going to be it. Please do leave if you want to, because I'm not going to say any more.